a deal together, and I'm actually going to want your participation in this. So I want you guys to figure out, somebody somewhere, let me know where we want to search for a property. Hello. Hey, we have audio. What's up, Corin? What's up, Colette? What's up, Michael? What's up, David and Chris? What's up, everyone? It says perfect streaming. Well, thank you. I think we're all ready to go. So we have your computer. Good. All right. So I need a city name. Where in the United States of America do y'all want to analyze a property? Could be anywhere, right? And let's see. The beard broke the camera. Kevin Stewart. That's funny, dude. Oh, wow. We got San Diego, St. Louis, Denver, Orlando, Pennsylvania. Wow. All right. Lots of places. Ogden, Utah. Isn't that where I send my taxes? Is Ogden, Utah? Thank you, Zach. Everybody say what's up, Zach. Zach. There's Zach. Zach is awesome. All right. So we are going to go look for some properties somewhere. Wow. So many city names. All right. Man, I got to figure out which one I want to pick. So first of all, before I pick the city, because I'm only going to please 1% of you, understand that the math works no matter where we analyze these deals. So don't get overwhelmed in thinking that you have to, I had to pick your city. We'll have some fun here. All right, so I'm going to go ahead and pick, Indianapolis might be fun. Wichita, I've never done Wichita. So maybe here, so we are talking about rental properties today, and let's be honest, rental properties in the Midwest tend to produce better cash flow than on the coasts. That's not always true, but a lot of times. So I think for the fun of it, I think I'm going to search something in the Midwest. Why don't we do Omaha? I don't think I've ever done Omaha. So here's what I'm going to do. I'm on Realtor.com. This is just one website that you can go to look for potential deals that are on the market. And I want to start here with Omaha because I know that's a lower price market. This ain't California or Hawaii. Right? Next question. Multifamily or single family? Right now, I think I'm only looking at multis because that's usually what I'm looking at when I'm looking for properties. But we can choose either. We can choose either multi or single. In this case, I think we should zoom in on some multis here. And again, I know these prices might not look like they do in California or Hawaii or Seattle. It's okay. Add a zero if it makes you feel better. So here's something for $275. Way over here, we got a $375. Look at that kind of cool house. That's in Iowa. Down here, we got $75 for whatever this guy is. $140 for whatever this thing is. Let's check out this thing for $140. All right. 2 homes on one lot. First home is 3-bedroom, 1-bath, large living room, eating kitchen, side deck, spacious, unfinished walkout basement, plenty of off-street parking. Second home has been remodeled with many updates. Windows, doors, bathroom, kitchen, blah, blah, blah. 2 attached car garage with alley access, conveniently located near Spring Lake School, parks, and the heart of South Omaha. No sign in the yard. All right, so here we've got this duplex for $140. Looking at some pictures. The reason I was drawn to this one, just so you guys are all aware of what attracts me to a property, I like duplexes. I like small multifamily properties quite a bit. And so, I'm looking through this thing. It looks like it's fairly good condition. It's probably about rent ready. This thing could use a little bit of a fixer-upper. I mean, I'd probably go in there and paint those cabinets, put on some new countertops, and maybe update the appliances, maybe drop some new flooring in eventually, maybe paint the inside and outside. But overall, it looks like just your kind of typical rental property. So I don't think we have to do much to keep this rent ready. We might put a few $1,000s into improvements just to spruce it up a little bit. But overall, it looks pretty darn good. I like it. But do we like the numbers? And that's really what matters here, right? Do we like this at $140? Because here's the truth. Every property has a number that could make it a good deal. Our job as an investor is to find that number. We want to find out that number. What makes it a good deal? And so to do that, I'm going to run the numbers. Now, of course, we could do this by hand if we wanted to, but I never recommend that because it's just really easy to make mistakes. We could also do it on a spreadsheet, but I also never recommend that. I never do that because it's very easy to make a mistake and it's really hard to showcase the strength of your deal later. But mainly, if you make one little mistake to one cell, you copy over a formula wrong, and boom, you might end up with a horrible property. So what I'm going to use here together is something called the Biggerpockets rental property calculator. It's part of our suite of calculators that we have on Biggerpockets. There's a bunch of them. The fix and flip, rental, BRRRR, wholesaling calculator, the rehab estimator calculator. Those are all kind of cool, right? But in this case, this is really a rental property. I'm going to use this. So let's go through this together. Now, by the way, before I go any further, let me just get this out of the way because I want to make sure if you like this stuff, if you're into analyzing deals or just rental properties in general, this week over on Biggerpockets, I'm going to be hosting a live webinar just like this, but we're going to go way more in depth. I'm going to walk through all the different pieces of how to analyze deals. So if you want to sign up for that, just go to biggerpockets.com/webinar. Again, biggerpockets.com/webinar, which looks like this. Webinars or webinar gets you to the same place. Here we go. How do I make this thing? All right, here we go. Just go here. How to analyze rental properties for maximum cash flow. It's happening June 27th at 5 o'clock Mountain Standard Time or Mountain Daylight Time. And you click register for the webinar and you'll be in like Flynn. I don't know where that phrase came from. Make sure you add it to your calendar then. All right, moving back. We're going to analyze this duplex, this Omaha duplex, and we're going to determine if it's a good deal at these numbers, right? So to do that, like I said, I'm going to use a rental property calculator. Let's call this the Omaha duplex. Wow, I cannot type. You ever notice that when people are watching you type, you can't type? Now, we can put the address in here if we want to. Sure, why not? You know, then there's a map feature on here. It'll make the map feature a little better. So I'm just going to copy and paste the address here. Boop-a-doop-a-doop. Let's bring it over here. Oops, that one right there. Put a city in. Put the zip code in. I know I'm doing this kind of backwards. Everyone feeling good about this so far? All right, so we got our page 1 almost done. We have to find our taxes, though. What are taxes on this property? Now, if you don't know, you can always hover over these little question marks like that, and that. This one says to look at your county assessor's website, but there's one little trick that you can oftentimes look on realtor.com and they will give you an estimate of taxes. In this case, $222 per month. If we want to run some quick calculation, 222 times 12, $26.64. So I'm going to use annual property, $26.64. I could put the MLS number in there. I don't really care to. I might do a photo though. I mean, like, we might as well make this report since it's just for myself look a little bit nicer, right? So I'll take a little screenshot photo. We got a little guy right here. I like it. We're going to add the photo. We're going to choose the file. Don't mind my messy desktop. And now we're going to do the sales description. What do we want to write about this property? Well, guess what? The agent gave us a little bit of information, and that was really good. So why don't we just use that? All right. That's it for page 1. Everyone feeling comfortable at this point? Everyone feeling comfortable. And by the way, somebody said they're having some buffer issues, which means it's not loading very well. Do me a favor, just pause your screen for like 30 seconds and then hit play again, and it should catch all on up. All righty. So let's go and move down to page 2. Page 2 is all about the purchase information, which means what are we going to buy it for? In this case, they're asking $140. Why don't we start there? After repair value means what's it worth when it's all fixed up? Well, if you hover over this question mark, it actually teaches you how to do that. But in this case, because it's already fixed up, we're not buying like a real dump. I'm just going to assume it's the same, $140. We buy a property, we probably got a few $1,000s in closing costs, and let's just assume $3,000 for repairs. We're just going to do a little bit of sprucing up, but right now it's in pretty good shape, so we're going to call it that. We're going to go ahead and drop a 20% down payment on this property, and we're going to do a 30-year mortgage. If that confused anybody, just go through this on your own later, go through each step and hover over these question marks, and they kind of guide you through each section. Oh, we want to get a 5% loan. 5% is pretty typical right about now. Now, page 3 is all about the income and expenses, the rental information, right? So what do we think? In this case, what is this rent for? Well, sometimes realtor will tell us. Sometimes they won't. In fact, here, are they telling us anything? According to them, the agent put in $850 and $550. Okay, $850 and $550. So we can run the numbers that way if we want right now, or we could use something like Rentometer to try to estimate it instead, right? So let's go and try that just for the heck of it. Rentometer will give us the idea of what is a 3-bedroom, rent. Is $850 appropriate? Not $3,850 for a 3-bedroom? Let's find out. Again, Rentometer is just one site that can give you a little bit of an estimate. So according to Rentometer, it looks like most of the properties 80% of them are between $830 and $1,450, which means I bet you this is actually maybe on the lower end of rent. That said, of course, what's the best way? Anybody know the best way to find out what local rental rates are? I mean, Rentometer is really good. Craigslist is really nice as well. I like Craigslist a lot. But really, I think the best way is to talk to a local property manager or a landlord. So is anybody on this one of these lives right here, this live stream, is anybody actually from Omaha and knows what a 3-bedroom apartment would rent for in an area like this? This was 3-bedroom, right? Let's just make sure. Let's see. One has a 3-bedroom, 1 bath, and then the second one, it doesn't actually tell us how many bedrooms that is. Maybe it does down here. Number of units, 2. Total number of rooms, 7 and 4. It's probably a 2-bedroom, 1 bath, I'm guessing, with a living room. So it's probably a 3-1 and a 2-1 is my guess. But yeah, exactly. Justin Bradford, you said it, property management. You could ask a real estate agent. Some real estate agents will know. Some won't. All right. So in this case, why don't we keep for now what the agent said? $850. So we're going to open up unit breakdown because it's a multifamily. Unit, we're going to call it $850 and we're going to call it $550. Now, is there any other monthly income? Not that we know of. We don't think there's a laundry room here or anything like that, so we can leave that. Now, one of the most difficult parts of estimating a potential rental property, just from the limited information we have here, is that we don't know who pays what. We don't know if we pay the water, sewer, garbage, or if the tenant does. In this case, though, I'm going to assume that I can pass on the water, sewer, and garbage charge to the tenant somehow. Now, whether or not that's an official, like they're actually sub-metered, which is unlikely, or if I can just charge them a surcharge or, charge one tenant 2/3, the other tenant 1/3. I've done that with my rental properties, never had a problem. I've never had a tenant even complain about it. So in that case, I'm going to keep electricity at 0, water and sewer and garbage at 0. My PMI, if you don't know what that is, hover the question mark. It's just an added charge that you sometimes get hit with when you do a low down loan. We don't have that here because we're putting 20% down. I doubt this neighborhood has an HOA. Usually they don't in this kind of a neighborhood where it's like rentals. Monthly insurance. I got to pay insurance. I'm going to estimate $100 a month. But does anybody know, how would I find out an accurate estimate of what my insurance would cost on this property? What do you guys think? Probably talk to a insurance agent? Very good. You guys are smart. All right. So for now, for quick and dirty, we're going to estimate $100. Is there anything else, like maybe lawn care or snow removal? Well, because this property, let me just tell you how I view this. Because this is 2 separate houses on one lot, I'm going to assume that I'm going to get a different quality of tenant. This isn't like an apartment complex. This is 2 separate houses. So I'm going to make lawn care and snow removal the responsibility of the tenant. Now, maybe later I'll find out that that's just unheard of in this type of a neighborhood. But my guess is I could probably get them to take care of their own snow removal and lawn care. So in this case, other monthly income, nothing. Other monthly expenses, probably nothing. But now we've got the most important part. That's things like vacancy, repairs and maintenance, CapEx, and management fees. So what's vacancy? It means part of the rent, part of the money that comes in every month, which we have $1,400 that's coming in. Part of that we want to set aside for future vacancy. I usually do 5%. If you have a really bad property manager or you're in a really depressed area, you might be more like 10 or 15%. Who knows? But in my experience, 5% is pretty typical. Repairs and maintenance, meaning we got to assume that every month we have repairs. In this case, I'm going to go with 8%, which is $112 for repairs. I want to estimate a little high because these look like older properties and some, it might cost, and I'm not local, so I got to have a property manager deal with the repairs, and it's going to be a little more expensive. So I'm going to do 8% there. I'm also going to do 8% for capital expenditures. Now, this means saving up for big ticket items long term, right? Big ticket items long term, which means like every 10 years, you got to replace the carpet, right? Every 20 years, you got to replace the roof. So CapEx is a way to kind of average those numbers over time. I usually like to see between $100 and $200 for these combined. I'm going a little bit higher on this. And that's because that's for a single family. So for a duplex, I'm going $224 combined. That feels pretty good. Now we have management fees. I don't live in Omaha, right? So I'm not going to manage it myself. I'm going to hire a property manager, probably going to run me about 10%. Now, the last section here, we've got our future assumptions. What do we believe the real estate market is going to do long term in Omaha? Well, over the last 100 years, we've seen inflation climb about 3% per year. So I'm going to go a little more conservative and say 2, 2, and 2, meaning 2% income growth, 2% property value growth, and 2% annual expense growth, right? Because expenses go up, property values go up, income hopefully goes up on average. Now, of course, yes, there will be ups and downs. I'm talking about long-term on average. All right, last one for the day, last number here. Someday in the future, when I go sell this property, right? Because I'm not going to own it forever. Someday when I go sell this property, what do I want to assume I'll spend in sales expenses? In this case, I usually use about 9% because I'm going to pay a 6% fee to the real estate agent who sells it. I'm also going to have some closing costs and whatever else. Now, those are all optional. You don't have to put this final future assumptions section in there, but I like to. And that's it. Now, before I hit calculate results, I want to get a quick poll from everybody watching this this live right now. We're live on YouTube and Facebook right now, and on live stream. So let me know, do you think this is a good deal or a bad deal? And I want every single person watching this to let me know, what do you think? Good deal or bad deal? I'm going to give you guys about 20 seconds for the delay. There's a little bit of delay between me talking and it showing up here. I want to know. Now, let me tell you while people are writing, let me tell you what I generally look for in a property. I look for a 12% return on my investment. And that's from cash flow. We call that cash on cash return, and I'll show you it in a minute. But typically, I look for a 12% cash on cash return, which means that if I put $1,000 in, I make back $120 in profit in cash flow every year. All right, so Brett Turner said bad. David said bad. Let's see. Pina said bad. What else we got here? Travis said good. Charlize said, just logged in, I have no clue. David said bad. We got a bad from there. Bryce said not so good. Askaya said not sure. Banner said so-so. All right. Bad, decent, not sure. Antonio said, I think it's maybe a good deal. So did Kelvin. All right, well, you know what's funny about this? We're split pretty evenly, maybe 60-40 bad. That's why it's so important to run the numbers, y'all. It's so important to run the numbers because you can never make a decision based on what's in your head. Maybe if you're a genius level, but I've been investing for 12 years and I'm still surprised every time. I can tell you honestly right now, I have no idea what this is going to show. Let's find out. Is it good enough for 12% for me? All right, so based on our numbers, we're looking at $42 a month in cash flow, which is a 1.5% cash on cash return. Man, I could get 1.5% by sticking my money into a bank CD, right? So why was it so high? Why is our cash flow so low? Well, look down here. We got vacancy, CapEx, management, taxes, our mortgage payment, insurance, and repairs. It all adds up to a total of $1,357 in expenses, and our income was only $1,400. So now we have a couple options. The first thing I'm going to do is I'm going to throw my hands in the air and say, there's no good deals in my market. Right? That's what people do. All of you, I'm sure you know people like that, right? Everyone complains there's no good deals, but listen closely. This is important. In today's market, you don't find good deals. In today's market, you don't find good deals. In today's market, you make good deals, right? And so we're going to make this a good deal. In other words, we're going to find the number that makes sense. Now, there's a couple things. A few people did say, just like Rentometer, said that they think the rent could be a little bit higher. In fact, you know what would be kind of fun right now is if I call up a property manager in Omaha. No, I better not do that. That'd be actually really fun though, huh? Find out from a property manager what they think this would rent for. But in this case, let's go a little bit deeper. I want you guys to see actually what I would do in this case. So let's open up a new tab, and here's what I'm going to do. I'm going to look on a map of where this property is, and then I'm going to go to Google, and I'm going to type in Craigslist Omaha. I just like using Craigslist. I think it's a pretty good way to look for property, to get an idea. I'm going to go to housing, and then I'm going to go to the map feature. You can choose map or list or thumb or gallery. I'm going to do map, and I want to find this property on here. Now to do that, I got to look at an actual map, and if somebody knows a better way to do this, please tell me. But this is what I always do. I look at the map and try to figure out where this is at. All right, so here we got this Omaha South, we got this T-shaped right here, right? We got the zoo over here, and we're just south of this big green area. So let's look for that on this map, right? So where's that at here? Is this that big green area? This is always kind of the harder part of trying to figure out where the map is. Oh, here it is. I think it was right here, right? Yep. I think this, yeah, Spring Lake Park right here. So there's the map there. There's our map there. So we know that we're right down here, just a block south of the green. So here we are. In fact, there's a property right here, a apartment complex, a 2-bedroom for $725. Okay, well that gives me a little bit of an indication of what this might rent for. I don't know what that is. Kind of a waste. Whatever about this one. A 1-bedroom for $500. Over here we have a duplex for $485. Wow, that's low. But it's only 1 bedroom. Obviously, we've got a 3-bedroom we're talking about. But there's really not a ton of stuff for rent right over here, right? So we can look around. Over here, we've got a house for $1,345. Over here, we have a 2-bedroom apartment for $650. Right, so we're kind of getting a little bit of an indication of what prices range, and I think $850 and $550 is probably pretty close to rent. Maybe we could push it a little higher, knowing that this one is a 2-bedroom apartment for $725, a 3-bedroom, $850, $900 maybe. All right, so that's how I look at it in this case. So what are we going to do? Are we going to throw our hands in the air and say there's no good deals? No. We're going to go back and we're going to find out what number actually makes this a good deal. Because remember, every property has a number that could make it a good deal. In this case, let's go back through here and just change the purchase price from $140 down to $110. Let's be crazy, right? Let's be crazy here. Down to $110. We still got our $1,400 a month there. We've got our insurance and our taxes, and we've got our vacancy repairs, CapEx management fees, and all our good stuff. Now let's try the property at $110. All right, well, now we're at $170 and a 7% cash-on-cash return. Still not a great deal. Now, I do want to look at one thing, though, because remember, it might not be a good deal today, but what if we held on to it for a little bit? I mean, what if we held it for a number of years, and then over time, maybe over time we see our cash-on-cash going up? Not really. Not until year 10 are we estimating crossing that 12% mark. All right, guess what? I'm going to go back through here. I'm going to do it one more time. Let's just say we paid instead $80 for it. Again, I know this is crazy. They're not going to take $80. I'm making a point here. Right? At $80,000 for this property, now we're at a 16% return. All right, so let's go back again. And let's just try one more time, see if maybe we're around the 100 mark, right? We're probably around the 100 mark. They're asking $140, offer them $100. Are they going to take it? Probably not. All right, now we're at 9.9. So you can tell we're pretty close. We're probably around the $90,000 mark. So at this deal, is it worth $90,000 to buy this property? Would the seller sell a property for a $50,000 discount? Probably not, right? In fact, I get rejected, and this is important, guys. I get rejected like 9 times out of 10. I lose a lot of the offers I make. A lot of them, right? But if I get rejected 9 times out of 10, what does that actually mean? It means that I'm getting something accepted 1 out of 10, right? And that's about my average. Rejection is just part of the game in real estate. Now, this is also a reason why I buy fixer-upper properties and not already fixed up. It's easier to find good deals on fixer-uppers. It's also why I don't typically buy properties that are listed on the market, like with real estate agents, because they're usually too expensive. What I do instead is I usually find other ways to find deals, like direct mail marketing or word of mouth or driving for dollars or Craigslist. There's a lot of things that I do that way. So anyway, that's kind of how I look at stuff. This deal, I might throw in an offer at $90,000. I mean, the other thing is this: we can double check these numbers. Let's just say we talk to a property manager and they say, "Oh yeah, you can get more than that $850 and $550. In fact, we think you can get." Let's say that the property manager says that they're positive we can get $650 and $950. Well, what does that do to our numbers? Let's go back to previous step. And let's go back to our purchase price and go back up to $140. So if we paid $140, but now we are getting $1,600 for rent, what does that do to our numbers? Well, we're better. Now we're at a 6.38%. Now, what if we found out, again, this is why I love these calculators, because you can go back and forth a million different times to find a way to make a deal good. What if we found out that we were going to pay $120, but instead we had to put in $20,000 worth of work on this property? But if we did that, we could get even more rent. We could get $750 and $1,250. Let's just say, right, hypothetically, because now it's fixed up. Now we got granite countertops. We've got, travertine tile. We've got a beautiful paint job. Well, check out what we just did here. If you bought it for $120 and were able to put in $20,000 worth of work, and if rent could get to that pushed up price mark, now look where we're at. Now we're at 13.85 and 542. So this is what most people don't understand about real estate, is that we're not trying to stumble across a good deal. We're trying to work through the numbers, work through different scenarios in order to find that out. And that's why I use these calculators more than anything else, is because I want to be able to quickly estimate these deals. Let me show you guys a couple more quick things. Let's say these numbers are legit. Let's say we can back up all these numbers. We find out that, yes, we could get that much rent if we fixed it up, et cetera, right? Now what I'm going to do is I'm going to download a PDF report. Check this out. I'll download a PDF report. I'm going to look at this. Here we go. And this thing I can print out now, and I can go give it to a partner, or I can give it to a lender and say, hey, here's a deal I'm working on, right? I think this is a really good opportunity. Or I can give it to my wife and say, hey, Heather, this is the deal I'm working. What do you think? And things like this, when things are clearly laid out, they're easy to understand. They have charts and graphs, and they got color. It tells people that you're confident, which is probably the number one reason that I use these calculators. But however you run your numbers, you guys listen close here. However you do your math, just make sure you present it as professional as possible. All right? So, again, this is this deal, you have to work some numbers. You got to investigate a little further. I want to find out, how high can we push this rent? What is normal in this neighborhood, right? But once I find those things out, then I can go back and change the numbers. And in fact, one really cool thing is you can actually start a report here on your computer, go look at the property, pull it up on your phone, because these are all mobile optimized. So if you shrink your page, they're actually all mobile optimized, which is kind of cool. So definitely check that out. Pull it up there. And then one last thing, if you click on tools, let's say we made an offer on this. This is actually really important. Let's say you made an offer on this property at $120 and they rejected it, right? They rejected it and they laughed at you and said, ha, no. Well, what I would do is I go in here, I go to view my previous reports, and I click that. And here's the deal I just analyzed. I'm going to go hover over other actions and go down to set a reminder. Set a reminder. And then I'm going to remind myself in a certain number of weeks to go follow up on the same property. So for example, in 2 weeks, I'm going to get a reminder from Biggerpockets that says, hey, don't forget to check on this property. Now I can go back in. I'm going to get a link right to the report in my email. I'm going to jump in here. I'm going to remind myself about the deal. Oh yeah, this is what I was looking at. This is what I want to do. And then guess what? I'm going to reoffer that same amount if it's still available, right? So anyway, that's why I'm such a big fan of this. Bryce Harrell asked a really good question over on the YouTube live version of this live stream. He said, do you think it's best to practice doing one of these per day to test it, even if we don't have the cash? Yes, 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 and yes. Here's why. Listen, if you're not ready to invest in real estate right now, that's fine. Get really, really good at the math. Here's why. Knowing how to run the numbers on a real estate deal is the number one most important, most valuable skill you can pick up. Number one most important thing you can pick up is learning how to run the numbers on a deal, which is why I'm doing a live webinar this week on that topic, right? Because if you know how to estimate a deal, you'll be able to be prepared once you are ready. And in fact, just the very, very act of knowing how to recognize and find good deals will help you feel more confident and actually ready to. In fact, if you have no money at all, but you're really good at finding deals because you know how to analyze them right, just find a partner. Find a partner who's not good at analyzing deals, but who has some money, and all of a sudden, you're going to be a lot closer to buying a property than you think. That's why everything, you guys know the book, The One Thing. I'm a huge fan of The One Thing. It's basically about this concept that what's the one thing you could do that if you do it right, everything else becomes easier. In this case, in real estate investing, it's analyzing deals. Once you know how to analyze deals, financing becomes easier. Once you know how to analyze deals, finding deals gets easier. Once you know how to analyze deals, owning rentals becomes easier because you've analyzed correctly and you can now have a profitable business that other people can manage for you. Everything hinges on your ability to analyze deals, whether you're flipping, rentals, wholesaling, BRRRR investing, whatever. So important. So I spend a lot of time on deal analysis. I hope you guys enjoy that. So Tony asked, hey, is the checkout code RETIRE still being offered? It is not. That coupon code is expired. I'm so sorry. If you guys are interested in becoming a Biggerpockets Pro member so you have unlimited access to these calculators, I may or may not have a surprise discount code on tomorrow's webinar. So make sure you sign up for that. If you sign up for that, I will, if I do indeed have a coupon code tomorrow, I will make sure you get it. Yeah, analyze. Get really good at that because it makes everything else in your entire investing world easier. And by the way, if you're not a pro member, you can still play with these calculators up to 5 times each for free. So just go to Biggerpockets, go to tools, click on the word tools, and then check them out. One thing that we didn't go through today, but that's really, really powerful and awesome and cool and I love is the Rehab Estimator calculator. Because let's be honest, most of the good deals today involve rehabs, right? So this is the Rehab Tool. You actually just let's say we want to do it on this property. It obviously helps to walk through the property, but you can pull this up on your phone. Let's call it Omaha Duplex, right? Duplex. And what you do is you walk through each and every category of the property. For example, roof, right? So in this case, roof maintenance. Do I want to do total? Like how much total do I want to spend on roof maintenance? How about $500? What about a roof replacement? Nothing there. What about gutters? Well, in that case, let's do gutters at unit calculation, which means like number of units, we want 300 feet and it's going to cost us $10 per foot, right? So you can do price per foot, price per square foot, price per whatever. We don't have to worry about soffits or fascia. How about exterior carpentry? Do we have any siding to do? Yeah, let's do labor and material. Let's do, $500 for labor and $1,000 for material for this. And it basically adds it all up as you go through each and every section of this. Windows, doors, decks, porches, concrete, garage stuff, landscaping, exterior painting, septic stuff, foundations, fences. And when we get through all of that, click next, and now we go to interior stuff. So demo, how much you want to spend on demo? How about we do, demo's only going to be probably $100 worth of material, maybe $500 worth of material, but it's going to be $2,000 worth of labor, right? And drywall, what do we have there? Well, why don't we just say total of drywall is going to cost us $4,000. We got a bid on that. We also got a bid, we're going to remove the popcorn ceiling, and that's going to be, $500 in labor and $100 in material. You can basically walk through each and every part of your analysis, right? Like this, we got 300, 500, 200 here. Heating and cooling, we got $2,000 there. We got a little bit of a baseboard heater there, 200. And as you're going through this, let's say we wanted flooring, right? We want unit calculation, number of units. There are 2,000 square feet in this house, and we're going to pay $2 per square foot for flooring. Great. Let's calculate the results on this. And what the estimation tool does, it actually puts it into nice little categories that you can then easily estimate how much your total expenses are. In this case, what we just added up was $20,400, and it walks you through all those numbers. You can even create a PDF report on that as well with check marks, so you can actually use this as your scope of work. When you go through the property, print this out, and then as you check off each one, work through that. Now, one more thing to add in here, if you guys want to see one more cool little thing, go to biggerpockets.com/files. I know I'm giving you guys a lot of cool stuff today, but check this out. So if you go to biggerpockets.com/files, if you look for my files, how do I even find those? Let's go forms. Maybe it's in there. I actually uploaded my contractor bid form. So I actually make my contractors do it. View my files. Oh, I guess we could just search for it. Anyway, here's some of my files. What else do I got in here? Contractor bid form right here. Here it is. So this is my actual contract bid form. You can download it in the file place. It's free. And this is what I have my contractors actually fill out. A description of the task. And what I often will do, anybody can do, is write see attached scope of work. And then, of course, attach the scope of work that we just did, this thing, right? The PDF report. So now the contractor goes through, see attached report. They give a total bid. They also have benchmarks. What's going to be done? When's it going to be completed? How much do they get after that point, right? So when flooring's done to be completed by July 1st, they get $3,000. When the roof is done by this date, they get this much. So basically, that way the contractor can't come back to you later and be like, hey, I'm going to need a little bit more money for this, or hey, I want to get paid ahead of time because I got, a big party weekend planned. No, you just pull out this, hey man, we agreed that when the roof gets done, you get paid this much money. It keeps everybody on the same page, right? Next, special notes, anything else you want to make a note of, and then contractor signs, I sign. This is my contractor bid form. I use it for all my remodels. I love this thing. Saves me a ton of time. So definitely check that out. Anybody else have any questions? Let's see. Colette said, Brandon is serious. This is what I do. Let's see. Somebody said, Chris Adams, can you show us how to run the numbers by hand? Yeah, let me show you, Chris, how I would do that. Now, you can only get some numbers by hand, right? You can figure out cash flow decently well. I mean, everything we just did in this calculator, let's go back over to the calculator. You could technically do by hand, except for when it gets the more complicated numbers. For example, cash and cash return, if you have a calculator, you can do it. Once you get into long-term return on investment, what if you bought the property, prices appreciated 2% per year, and then you sold it? You're not going to get this stuff by doing it by hand. And that's why this stuff is really, really important, because you might buy a property today that 10 years from now might be horrible, right? And if you do it by hand, it might look really good today, but it might not be good long term. But if you want to see a good way to do it by hand, do it like this. Go to YouTube and search for, there's us right there. Search for Biggerpockets 4-square method. Biggerpockets 4-square method. It's called Calculating Numbers on a Rental Property Using the 4-Square Method. This is what you're going to, if you want to do it by hand, it took 22 minutes for me to go through these numbers. This is what it looks like to do it by hand. This is what the Biggerpockets rental property calculator can do in about 3 minutes. And then way more than that. But if you absolutely want to do it by hand, watch this video. I think you'll actually like it. This is my second most popular video ever, 608,000 views. So if you watch it, make sure you give me a little thumbs up because, got to spread the word. So what else you guys got for me? Any other questions I can help answer? Let's see. Biggerpockets said, if you enjoyed this live, please make sure to share and like it. Oh, Zack. Yeah, Zack's joining this Facebook Live. If you guys like this video, click the like button and share this if you think this is, valuable. All right. Well, I'm sure there's more questions. I'm probably missing them. Oh, here's one from, hold on. I don't even know how to use my mouse. Where's my mouse? I don't know. What's my most viewed? It's how to build a website using Wix. That's my most viewed YouTube video. Well, I don't know where my mouse is. Oh, there it is. Okay. When you make an offer, do you give your highest and best on the first offer? Chris, it depends. If I'm making an offer on a competitive deal, let's go back to our deal here. This property right here, this property has been on the market for 130 days, right? This has been on the market forever. So I would not give this my highest and best because I don't expect this to be gone tomorrow, right? I doubt this is going to be gone tomorrow. So I'm going to instead offer a little bit less and I'm going to negotiate into the price I want. If this property was a really good deal that came out today, then I would probably offer my highest and best because if I'm competing, then, I'm going to have to do what I got to do. All right. Let's see. Deliveries by Harry said, we have Brandon's book on Audible and on our phones. Great listening while driving 17 miles one way to work. Thank you, Deliveries by Harry. You rock. Bose said, Bose News. For a beginner, do I put my first house under an LLC? That is a loaded question. If you want to know my entire philosophy behind it, just go to biggerpockets.com/LLC. Biggerpockets.com/ oops, not two dashes. There. And it's called Should You Get an LLC for Your Real Estate Business? It goes through in depth on all my thoughts. The short answer is you're not required to. And in fact, the bank might not let you, but LLCs can be valuable. So there is a time and a place for them. So read this article if you want to know more about that. All right. Hey, Josh Dorkin, what's up? All right, guys, I'm going to get out of here. I have to go and do fancy stuff. In fact, I'm working on a mobile home park deal right now. I'm trying to put that together, and I'm going to be pitching to some potential private investors that I'm going to bring in. So anyway, I'm going to go work on that. So, keep crushing it. Keep doing it. Go make good deals. Remember, today's market, we don't find good deals. We make good deals. You guys rock. I will answer one more question because you guys are awesome. Sean asked, why wouldn't a bank allow you to put an LLC? Because there is a thing called a due on, well, there's two pieces of this. Read that article, this one, the LLC thing. But the short answer is residential loans don't allow you to use an LLC to buy it. They make you put it in your own name. Commercial loans don't let you use your personal name. They make you put it in an LLC. Right? It's just a weird rules that banks have. But if it's a residential loan, if you're buying a duplex single family house using a conventional residential mortgage, they're probably not going to let you use an LLC. Now, you can transfer it into an LLC later if you wanted to, but that also brings up some hard consequences that could be bad based on the due on sale clause. But again, read this article, biggerpockets.com/LLC. Hope that helps. Thank you all. This video will be live on whatever you're watching it on a little bit later. Usually takes like a half hour for it to get edited or finalized. But if you are just joining us, make sure you join later. And again, if you have more questions, if I didn't get to everything today, please and if you want to know more about analyzing deals, go to biggerpockets.com/webinars. Biggerpockets.com/webinars. And when you're there, you can sign up for this week's webinar, How to Analyze Rental Properties for Maximum Cash Flow. There's already 3,500 people signed up. So make sure you're number 3579. And I will see you tomorrow afternoon on the webinar. You guys rock. Thanks so much for being a part of this. And next time I'll try to figure out how to get my face on the screen because today it didn't work. But at least you got my computer screen. Thank you all. Have a fantastic day. Adios.